Well, welcome everybody. Thanks for joining the webinar. This is called Fortifying Your Wealth Stack, Cybersecurity, Compliance, Safeguards, and Insurance for Financial Advisors. So the big question always, why are we here? We're here to discuss the impact of the recently updated cyber regulations for wealth managers and how new solutions can make it simple and easy to meet those requirements in three key areas of cybersecurity, cyber compliance, and cyber insurance. So to get it started, I'm going to be moderating. My name is Mike Cassiano. I work with Evo Wealth Consulting. And after 20 years of working with advisors, I started my own consulting business to help them understand not just technology, but the processes and how to integrate it into existing tech stacks, along with how do they activate it throughout their firm. So I'm here to help guide us, and I'll turn it over for the introductions to the real stars, the subject matter experts of the panel. So Vincent, go ahead.
Yes, thank you. So I'm Vincent Guyaux. I'm founder, chairman, and CISO of Buckler. As a lot of you know, I started my journey in cybersecurity with FCI, still working with Brian there. So we saw an opportunity to launch a startup that is no longer a startup. It's been more than 2 years now with a cyber program management system. So Brian?
I'm Brian Edelman. I former financial advisor and turned cyber expert in 1995. Became very passionate about protecting financial advisors and the information that they collect. And our firm is a specialist in cybersecurity for financial advisors and financial institutions.
Chad?
Yeah, so I'm Chad Ramberg, president of Box Professional Insurance. Box Professional is an insurance brokerage company built specifically for the advisory industry, RIAs specifically, and we're actually expanding to larger broker dealers, insurance agencies, stuff like that. But what gets interesting is like Brian, I used to be an advisor. I was no good at it. I used to be on the claims side of insurance too. I was even a claims adjuster for a little bit. So now what we're doing is we're helping financial firms make sure they're getting the best coverage and the best terms they can. So quality becomes important. So I'm so happy to be here because before we get to insurance, you should be talking and getting your stance in good shape. So I'm honored to be here.
Excellent. Thanks, Chad, Brian, and Vincent. Vincent, I too was an advisor, so it looks like you're the only one so far, but that's a promising panel when that's our target audience. So as I said, I'm the only non-subject matter expert. So the term that I hear that's super catchy is zero trust. And it's kind of catchy like direct indexing. So I think it might be good to start there and say, what actually is zero trust? And what does it mean when we talk about zero trust in terms of wealth management firms? So I think we're going to turn this one over to Brian and let us know.
Zero trust, there's a couple of variations of zero trust. It started to show up as a technical buzzword. It basically was used by cyber experts to try to sell one piece of zero trust. But what happened, the government got together. They have a group called CISO. They produced a document called the Zero Trust Maturity Model 2.0. In this document, and everybody should read it if they want to be cyber secure, it defines and basically took all of these statements around zero trust and defined it. What they said was that there are 5 pillars of zero trust. So when somebody says there's zero trust, you have to ask and try to figure out what pillar they belong to. One, it says you have to have a zero trust application. So what that simply means is that you pick a best of breed application, and we're going to talk a little bit about making sure you do your due diligence on that. But due diligence should come in 2 forms. One is it a secure vendor? But when it comes to zero trust, it's about the settings. It's about making sure that bad actors don't have the ability to get into a system, because bad actors will give up if it's hard for them. But if you make it easy for them, they will commit bad acts. And we'll talk about that. The second area of zero trust says user. Is the user logging into that system the person that they say they are? So there's been some advancements in that, making sure. And again, CISA again came out and said, hey, not all multi-factors are created equal. If you have a multi-factor that's emailing you your codes, and your email's compromised, that's not really a good multi-factor. So they came out and they created another document, and we should share those two documents because they're important when talking about this. The third area of zero trust says, are you using a secure device? The device that you're using, if the endpoint is not secure, it doesn't matter how much someone else has invested in security, the bad actor is going to come through your device and get to that other system. So you could spend $1 billion on security and hardening and making sure you're the user, but they said if the device is compromised, that's also a problem. The next part of it, the fourth part, is the network. Is the network I'm in a secure network? See, when you connect to, let's say, a Starbucks or any of those other networks, if you don't have a secure networking device, that you're giving the person that you're connecting to their Wi-Fi the ability to redirect you to any website they want. So you might think you're going to a Chase or a Citibank, but ultimately they say the fourth pillar is networking, and the last pillar is data. Absolutely amazing what the bad actors can do with data. They are so creative, you can't even imagine. People turn around and they make statements about, oh, my information's out there and why do I have to protect data? When you see what we see, and you see, especially on the insurance side, when you see those claims and you see how creative somebody was with something as simple as a cell phone number and a contact record and knowing who the advisor is, when you see how creative they can be with what used to be two, but imagine they get 3 elements of data, that's all they need, and they can execute a massive cyber attack. So when it comes to zero trust, what the government and what the insurance companies and what the regulators are all saying is, the more that you have a system like a zero trust ecosystem, the less likely you are to have a cyber breach.
If I can add one phrase, Brian, we talked about that. What we saw in those documents is verify, then trust. So zero trust means don't trust anything in a way. You have to verify first at all the layers Brian mentioned. When you did that validation, you can trust. So that's
and now you add in AI, and you really have to be suspicious of everything. So, as we put in our own practice, and I'll give kudos to a lot of these bigger financial institutions. When they see that you're logging in from a new computer, they'll send you an email. They're starting to see some natural cyber where they're in essence employing several parts of zero trust, even if you're not doing it as a firm. So great stuff that we're seeing out in the market.
Yeah, go ahead, chat.
Yeah, so I wanted to say something about that fifth pillar, which I think from an insurance standpoint is where things really can get dicey, is because you can have trust, BC, let's say the advisor and the client, you can have absolute trust there, but because of the interactions, and if those fraudsters catch you at a time where you're super busy, things are going on, you're trying to move forward, it opens up a potential hole to exploit the trust that the clients have with their advisors. So, that's a different type of trust, but that's one of the holes, one of the most challenging things is as individuals, when they catch us at the right time and they're socially engineering a situation to break through all those other avenues. So it's a good pillar.
Yeah. And we know it's not getting easier. I think 2 days ago, I got a letter saying that my Social Security has been leaked since sometime in early 2023. So that was the bad news. I mean, the good news is I've got my 73rd offer for 2 years of credit monitoring. So we've got that covered. Let's get in the DeLorean and go back in time. Let's find out how this all started. So, Brian, I think you're going to share with us an example of maybe what kind of kickstarted this whole cyber movement.
Well, I mean, if we go back all the way to 2010, I don't necessarily want to go that far back because in 2010, the Massachusetts, they came out with their first cybersecurity law. It said basically every device has to be encrypted that has a Massachusetts resident on it. You then go from that to New York Department of Financial Services, and then they created a very comprehensive thing. And basically with New York Department of Financial Services and then the SEC, one thing they agreed on, and it should resonate with advisors, is they came out and they said 2 things. You have to do 2 things. One, you have to have a plan. like you would have for an advisory client, right? You should have a financial plan. And then second, you have to execute on the plan. So when you think of it in those two simple ways, you say to yourself, wow, that's really as simple as it is. Now, those plans are comprehensive. And what those plans are called in cyber is called a written information security policy. So interestingly enough, a firm called RT Jones, which is an advisory firm and a third-party administrator. So they would basically manage pension plans and invest money. They had a breach. One of their vendors had a breach. So what they thought they would do is call up the SEC. So they made the phone call and they called the SEC and they said, hey, SEC, you should know about this. Our vendor had a breach, right? That's what they did. What they didn't know is a week earlier, the SEC came out with a rule, one of their first cybersecurity rules, and it said, you have to have a written information security policy. Now, interestingly enough, this is the first example where you started to see regulators and authorities hold the advisors and the financial institutions accountable. It was one of the first actions. They walked in and RT Jones' expectation was they were going to come in and help them. That's what their expectation is. And every time we're dealing with this, with the insurance companies, with the authorities, when the FBI comes in, and that's pretty scary. And, you know, now you have the SEC coming in and they thought they were coming in to help. And what happened? The first thing they asked RT Jones for was, do you have a plan? RT Jones said, of course I have a plan. They said, great, print it out and hand it to me right now. Hand it to me. They couldn't. The SEC immediately fined them. So here they went and they thought they were going to get help. But the reality is, if you're not in compliance with the cyber regulations, you have to make sure that you are. I mean, the easiest thing to do is to get into compliance with it, because you want help when a bad act happens. You don't want to be a double or triple victim. I call it double victimization. Why? You're a victim of the bad actor, and now you get the authorities involved to try to help you. And the first thing they start to ask you for is all this stuff. What's your plan say? Now, the details of what your plan says is kind of what Buckler takes you through. It makes it easy to do stuff like that. But in those details, it's going to talk about everything from potentially having to have cyber insurance, or having to have safeguards on computers, or having to have, you know, somebody is appointed as a CISO. So those are all things that became clear. That's in the plan. So if we think about it as simple, cyber and financial advice are very simple. You have to have a plan. Although it's not a requirement for a consumer to have a financial plan, in cyber, it is a requirement to have a cyber plan called an information security policy. And secondly, you have to make sure you put the right tools in place to keep you safe.
That's a great segue. So from that example of RT Jones, Vincent, can you kind of explain what the fallout was and how that's led us today to the new cyber regulations that are in effect?
Yeah, so what we saw in the past, let's say 20 years, but closely more in the past 10 years, is those regulators, you know, you talk about FINRA and SEC in New York State and NAIC for insurance, they came out with a lot of documents. At the beginning, it was really generic, you know, you have to protect endpoints, you have to protect your network. And then they start to be more prescriptive, going to the details of what you have to do exactly. And there's two types of regulators. You have the one like SEC and FINRA that gives recommendation, and they basically tell you you have to develop your own policies to cover these subjects. And then you have New York State that went deeper and said, no, these are the requirements, and they're clearly stated as a law for New York State. So as an advisor, what we realized, and I was working with Brian at that time, is our clients were not doing this, because what you have to do is to look at those regulations, create your program. So we created at Buckler a template cyber program based on those regulations. So instead of the advisor having to develop their policies, we did the template program. They can do it themselves. You know, some of them are hiring consultants, some of them are downloading some of these examples. But then the challenge is, how do you know when you have a document of 50 pages that you meet regulation? So you need to be able to match what is required by regulators with what you do. And that's the goal of the cyber program. you know. And then that's the first phase. Brian came up with always those crazy names. He's called that an active cyber program. So it's not a static document that you need. In there, it says that you have to do some activities monthly, annually, and all this. So you need a tracking system to do those tasks, and more than that, evidence you're doing it. Fascinating to see an SEC exam requirement. We got those letters that our clients are sharing with us. When you see what they're asking, it's all about proof. They say, I'm sure you're doing this, so show me in the past year all the reports every month that you did for that, or show me an example of, it's always about evidence. So it's no longer just a cyber program, it's tracking and evidencing.
Excellent. And then how does this spill over into cyber insurance, Chad?
Yeah, one of the key things as far as expectations, we are wise to recognize there's kind of an informal handshake between the regulators and the insurance carriers. And you'll see this in the applications, the cyber application. There's always some sort of question in there. Are you meeting the regulatory requirements, or have you been audited? Or there's a number of ways they might ask the question, but really it's kind of getting into the same idea. And that is this. The expectation is that you are already meeting all of these requirements. In fact, the carriers are then going to go ask a few more questions to really gauge where you're at for best practices in this space as they understand it. And I say as they understand it because we know carriers are not really cyber experts. They're just helping defer that cyber risk. The cyber experts are the Vincents and the Brians and the organizations that are helping protect you. So first off, we just say they're expecting that's already taken care of at a minimum meeting, and then hopefully at best practices and stronger from there. Okay. And then what happens is when we're starting to look at coverage, because they can look at your address so they know where you're at. We're also going to recognize when we're working with our clients where their custodials are, because we're also going to be wanting to check in the background, or this is what you're going to be wanting to think about when you're looking at your own cyber coverage. Are you meeting the requirements? There's one state in the United States that requires you to have cyber insurance coverage as a financial firm. Okay. There are 2 custodial firms that require you to have a level of cyber insurance. And then there's all these other factors that come into play that could say, well, what's the appropriate limit? How do we structure it? Stuff like that. When we're looking at insurance, we really want to know, we don't need to go super in depth, but it is helpful to understand how you're thinking about it, who you're working with, some of this information, because that's going to tell us how sophisticated you are and be able to negotiate better terms based on whatever you need.
Question for you,
Just
Chad.
confirming there.
Just
confirming real quick. So it's one state that mandates it, 2 custodians, but there's not a blanket rule from an SEC or a FINRA or anybody else that cyber
Currently
insurance.
I haven't seen one, but as Brian and Vincent know, it's changing every day. So, if you pull up a memo, maybe it changed today. I don't know.
What we see in SEC, is when they do those analysis of the market, and then they say, oh, 85% of the advisor have cyber insurance, so they will note it as a best practice, so that's how they refer to it. But I can tell you, when they audit you, typically they will ask, can we see your cyber insurance? It's always a difference between the regulations that are published and what's happening when they audit you. And we have clients that went through exam, and then they say, they didn't ask anything. They just asked, do you have antivirus? So sometimes it's a light audit, and sometimes it's a deep one, and you never know. So it's not because you pass one cyber exam that you made it. The next one can be really, really harder. That's for sure.
Now, I can tell you firsthand, when our clients have a cyber exam, and New York Department of Financial Services showed up at one of our mortgage banking clients. When I tell you how comprehensive, so, like Vincent said, it really sometimes depends on the regulator who shows up. Are they familiar with what cyber is or not? And, how much are they focusing on that as part of their exam? Well, we had one of the New York Department of Financial Services head cyber guys out there. And when I tell you they were looking at everything, they were looking at everything. So, fortunately, when you have representative and you have a cyber expert with you in those meetings, there was some misinterpretation of the evidence. So like having a lawyer involved, when you're dealing with a legal matter, it's probably pretty important to make sure you have your insurance and cyber people when you're dealing with these events. That's for sure.
It was fun to operate in slightly gray areas, and obviously a testament to why it makes sense to get the right help of people that are informed. So to follow up on that, Chad, out of the new regulations, you see it from the insurance side, how successful have wealth management firms been about being able to meet the new criteria for cyber regulations?
Boy, so I don't have an exact answer for that because we don't go that deep with every client. What we are doing is we're encouraging to have coverage. We're out there communicating because what we want to see is that best practices being followed, not just that you're meeting the regulations. Because in my opinion, the regulations just, I'm not saying I want more regulation. I'm saying best practice is better than that. Okay. And so I would say, when we ask our clients, are they doing a good job in meeting it? They're saying yes. When it comes down to a claim, a lot of times we find that maybe somebody in the organization who filled out that cyber application got to a question and said, man, I don't know exactly what that means, but I think we are. Yes. And then there's a claim. Now, the terminology and the language may mean we still have a way to help them out. God willing, we do. We work hard to make sure that we do regardless, but we still have to go. That's part of the package of the coverage to what is answered on that policy. And what we really encourage to make sure that all of these things are being met to up their level of compliance is say, make sure you're talking with an FCI or whoever your vendor is and go over these questions with them, because then we're going to make sure we don't have an unknowledgeable person answering questions and they answer it wrong just because they didn't know. Okay. So these are the sort of things that we're doing to try and help elevate that conversation so we are meeting them. I can't give you a certain percentage, although I did have a question from a client just prior to this, how many are buying coverage? And it looks to me like it's north of, 85, 90% are buying some degree of cyber coverage. Now, we run into a lot of times is they haven't coordinated or thought critically about the limits and how it's structured. So all of those become a component in that. The best time to think about that is at your annual renewal cycle. But we're going to be expecting Vincent and firms like FCI have been doing their work with you.
Absolutely. Well, part of this too is the requirements around vendor risk management. So I know there's been a lot of new and exciting announcements about something Vincent's going to talk about. So can you tell us a little more about vendor due diligence and OpenVRM?
Yeah, so when we launched Buckler, we were looking for a freemium and we didn't know what to say because we say, if we let people go and manage a program, it's too much, you need an onboarding call. So we decided to find something else, and we thought of trying to fix a big issue in the industry, which is vendor risk management. So we launched a standard. It's an open standard. It's free. It's a platform that we're providing for vendor to put their information and for clients to review that information. So now it's been a year and a half, and we have now companies that I was not expecting to have, like HubSpot and ClickUp and Zoho. So we have the big best of breed generic vendor that they sell to all industries. And in our world, we have now Orion, we have eMoney, we have all those names, the brand names. So we're having 1,000 vendors listed on the platform, and it's growing because they're not all participating. They're all there. Now slowly we're adding every day. We have 6 today that I heard we're getting onboarded. So that's something that is important, because what we see, most people, when we start to work with them, what they say is, oh yeah, we have a list of vendors, but that's not what it is to do due diligence. You have to ask them information, understand how to review that information, and accept that you have that vendor active. So in the regulations, you find requirements about provision in the contract. You find what they say exactly is that since the regulators cannot enforce their regulation on vendors, they do it on the advisor, and they say you have to make sure that your vendors are meeting our regulation. So it's a huge mandate that we're trying to support and help.
And what I like about what you've done is you've added the ability to know whether you've hardened the platform, whether you turned on multi-factor. You made it really simple for any of the advisors, even a single advisor firm, to just add the vendors they have. And that's really the first step. Make the list of the vendors that you use. Make sure you're using best of breed vendors, because it's easier to turn around and say, well, I'm using this application that everybody in financial services uses. That's a good start, but you're still responsible for getting those packages. So that was a great job that you made it easy for the advisors to do. So nice work.
And what
Yeah.
our clients were telling us, just to finish, is they loved it, but they didn't have time because they don't have a resource that be able to do this. So we decided to launch, and it's going to be in a week or two, but we launched it with some clients already. We're going to offer to do it as a service. So if somebody wants to say, I want to outsource that vendor risk management, the platform is free. You can use it, or you can pay somebody to do it for you.
Yeah, the thing
That's
I
awesome.
love about it is there's some questions that the insurance carriers have on their cyber applications. It says, do you have a vendor risk management program? How are they verified? And I would be on a call with some clients in years past where they said, oh yeah, I said, how do you qualify your vendor? Well, they're Microsoft. They're qualified because of their size. And it would be nice to think that every vendor, no matter their size, has done that stuff, particularly when they're large. But we remember breaches that we've seen in the past because there was something that was open there. So thank you, Vincent. I'm glad that you built it the way it has. And I encourage everybody to look at OpenVRM, because at a minimum, that's going to help you start to satisfy some of those things you need to.
And they ask those questions with that vendor process, because when people put their systems on Amazon, they just say, oh, sure, we're SOC certified because we're on Amazon. No, you're not SOC certified because you're on Amazon. You need to get certified and make sure that your Amazon instance is secure. No different than you have to make sure your Office 365 instance is secure, and if your Azure instance is secure. It's up to the firm to make sure that they ask the right questions and get the right evidence.
Sounds like bottom line, no matter what, the buck stops with the advisor and the wealth management firm. No matter what happens, if they don't have the policies in place, clearly, you know, they're going to be fighting an uphill battle from the beginning, and we definitely want to prevent that. So, Brian, I'm going to come back to you. Help me understand, why is it important then to work holistically with these three components of cyber compliance, cybersecurity, and cyber insurance?
Well, a bunch of different reasons. It depends on who's showing up at the door. Certainly, it's the expectation when you have a breach. So I can give you an example of a breach that happened where we were brought in on a prospect. A year earlier, we were prospecting with this client, very big client. Next thing you know, they have a breach. Next thing you know, a lot of money was stolen. They filed an insurance claim. The insurance company asked for the evidence that was just discussed. So the client went ahead and tried to put together an evidentiary package showing how the bad actor did what they did, but there was fraud in the, not intentional fraud, but it was very clear that there were gaps in the evidence that where the internal team made up stories, and the next thing you know, the firm was potentially being now in a position where insurance fraud was being levied against them. So that double victimization, you just have to be real careful. But it comes down to, when is somebody going to ask you? Because at some point, somebody's going to ask you, whether it's a client asking, and we're starting to see that, whether it's a regulator asking, we're starting to see that, whether it's your consultant that is asking you and helping you navigate what best of breed applications, because, you know, at the end of the day, you also have to operate a business, right? So you have to make good decisions on the operational technologies. What you have to now pair into that is, in the decision-making process of what system should I use to run my business better, you have to start to also think, is that system a system that I could be held accountable for, or can I secure it so that I don't have to worry about that? So it really depends on who's going to come ask, but know that when they come to ask, they're going to be looking for policies and procedures. They're going to want to understand if you have insurance. They're going to want to understand that you have the technical controls. Do you have the right controls in place? And then do you have the right team that's helping you navigate those challenges of cyber when they come up? Because that in itself becomes that important process that you need some expertise. And I don't mean to pick on some of the insurance companies, but there are some, I'll call them opportunistic cyber resources that know how to navigate your benefits in your insurance policy and may not be doing what's right for the client, but maybe doing what's right for them. So there's a lot of different complexities to this. The best thing to do is have a great partner in cyber.
Maybe add there too, you know, like if I'm a smoker, I know my life insurance might be a little bit more expensive. How does that look from the insurance side in terms of cost when maybe they're coming to you with different levels of preparedness in terms of the compliance and security side?
Yeah, great question. So Brian, first of all, a little bit of conversation and criticism is healthy in a good market. So I appreciate it. It's good. So what happens is when a lot of carriers, this has been developing. So you've got the good guys and the bad guys, then you've got the good guys on the insurance side, and everybody's trying to figure this out. On the insurance side, they genuinely do want to make it a better environment and a safer environment and reduce claims overall. But what happens is they're trying to figure out how to do that from a large numbers perspective, not as good as what a Brian can do from a specific firm by firm basis. Okay. So what some carriers, some of the best carriers that are offering terms right now, they're doing some penetration testings from the outside, and they're running that before they're offering terms to the client. And now, they're not as good as what Brian's doing, and it's not nearly as robust, but it does help assess that risk. And if that risk level is too high by whatever they've decided as it's either a number, some of them do it a scoring number, they've got a bunch of different ways they can look at it. But if it's too high, they just won't offer terms. So then what we do is we're going out to the rest of the market, just as you would for life insurance if you have some comorbidity or something like that. And we're saying, hey, we've got this, but this is how it's been mitigated if we need to. Sometimes we can get quotes, and some carriers, they don't have as tight of a process going into it, but they're probably going to have higher prices. So it shows up somewhere along the line.
Gotcha.
The tools that we use to be able to do that are the same tools that the insurance companies are using. So they've matured quite a bit. So there's 3 areas that they're looking at, certainly on the public side. We look on the private side too. So we look at the security on the computers, but on the public side, you're thinking about, are you and has your information been sold on the dark web? They look at that on the insurance side. 2 is they look to see what your corporate hygiene is. That's what you're talking about, where they give it a score. So every corporation, every domain out there has a score as to whether or not the internet thinks your company is secure. So you can ask us for that. We'd be happy to share that number with you. But that's something where we just put your domain in and it says, here's your score. And the last part that's really, really scary, and I'm not even going to tell people where this is, but they go into the bad actor system and they put the domain in, and it tells them exactly how they can successfully hack your business, how they can successfully hack your vendor. It literally comes up and gives you, here's how you do it. And then you could watch a YouTube and do it. So the tools are really, they're there. They put those tools out for the good people, that's us, and the bad people. And it's up to all of us to make sure that we do what we can to make sure that no bad acts happen.
So once again, the onus falls on the wealth management firms. And, you know, Vincent, maybe you can add, we're talking about how they have to, you know, the regulations, requirements, what they need to do, but share with us some other examples about how cyber kind of impacts wealth management firms and potentially, you know, their growth or success.
I think that's an interesting factor, is that just the valuation of an RIA. Okay, so now what we see is PE companies calling us, FCI, Buckler, and they say, hey, we'd like to audit that firm before buying it. That's the new trends that we start to see, because they want to, so what's at risk for me if I buy that firm? What's my liability? So then suddenly you do the audit, and if the results are bad, I mean, the firm needs to either improve, but typically it's going to change the valuation. On the other end, if you want to sell your business or you want to grow it, you want to protect what you invested. So then you're going to say, the more I put into cyber, I know it's an investment, but it's guaranteeing a better valuation of my company if one day I want to sell, or just to protect it, so protect those assets. So that's something we see. I think the PE world is getting really involved with cybersecurity now.
The one thing that a bad actor, or at least a financial advisor, financial institution, needs to understand the most is why they're the target. They're the ones with money. So imagine I compromise one financial advisor who has 500 clients. I can attack 500 clients. So there is a reason why in financial services, they've been a leader in cybersecurity regulations. I think there's a reason why cyber insurance in financial services, when you ask that, it asks a series of different questions. It all makes a lot of sense as to why you have to have these things. The key and what we'd all love to see is a higher level of adoption of cyber services.
So let me know if you have any questions, pop them into the chat. There is a Q&A if you have anything, but I think let's talk about what next steps would be, Vincent, in terms of people that are interested in either helping themselves or maybe turning to some of our experts here to have them help them.
Great. So the world is changing. You know, we feel that ads marketing is still working, but not as good as it was in the past. So the three of us were wondering, what can we do to get to meet people? Because when you show your value, it's always coming back to us. Maybe not directly with the client we talk to, but it's helping the industry, it's helping us. So what we decided to do, I'm going to share the screen again, share here. So it's to offer a full revision of your cyber posture and more, you know. So, and the people on the call will be the one delivering this. So we have a team that will organize all, but we each going to look at this. So I'm taking the first two tracks, you know, so cyber policy documents. We say to clients, send us your policy documents. We're going to review it. We're going to match it regulation based on the regulations you have to meet and tell you how you stand. And then we're going to ask you, how do we review your vendors? Show us your list. Tell us about the process you're going through to manage your vendor. Then Brian is going to run some crazy tools that he mentioned earlier, and he's going to provide a document and say, look, these are the weaknesses that you have. You should improve this. And they may have a team that will do it. And then Chad offered to say, send me your cyber insurance. If you have one, I will look at it. I will understand a little bit more about your business, and I will look for a competitive quote if required. Sometimes he said, no, you're gold, but sometimes not. And if you don't have an insurance, will be the time to have an evaluation. So all this is offered at no cost. It's really to get to know our potential client, but also people that we can help. So that's really a critical for us.
I think as well, you said you would even provide a self-service checklist, correct?
Yes. So if you don't want to do it with us and you say, well, I'd like to look at it myself. So we have 13 questions. Brian was on stage at T3 and it was a success when he used these, but it's really like, here's a question you can ask your team or yourself, and you do it yourself, you know, without us. So we'll send you both after if you want. You're right. I forgot that one.
Right. And the change in regulation was about attestation versus evidence. And the difference is, if you think about when this first started back in 2010 with the regulations, they used to accept an answer, no different than the insurance company would accept an answer on an application. They'll take and accept your answer. They'll collect your premiums. But at the end of the day, they're going to want evidence now at some point. So the key is, when you ask the question, ask for the evidence. And the key, and what everybody has to understand, you don't have to be a cyber expert to be able to look at a piece of evidence and say, does this make sense? Like if I asked you for a list of all the devices and I get in return a recipe for how to make the best hamburger, that's what's going to happen. You know, you ask for a list of all your devices. Every firm has to have a list of all the devices that connect to private data. When you get the list, if it shows you computers, it's a great start. So it's a list of computers, okay, and you have to be able to recognize it. So the leadership team can't accept an answer, a question and an answer where they go to the IT team and say, hey, do we do this? Yes, we do. Don't stop there. Ask the question a regulator would ask the question the insurance company's going to ask. You said you do it. Now we have a claim. I want to see the evidence of it. Show me the list of devices. Show me that you spent time hardening your systems. Show me that you have multi-factor authentication installed. Show me that you have secure networking. Show me you protected that data. So that's going to be just something to think about. Don't, you know, it's not the beginning of this process. It's the evidence that you're actually doing what you say.
That's perfect. A couple questions came in. One of them, I think, in disbelief. They're saying, are you really telling me this is free? So yes, for viewers of the webinar, the evaluation, they've agreed to make it free.
Yep.
Another follow-up question. Do you have firms that are working with some or all of you on the call? That is an excellent question, because that's a big reason why we all got here. So I'll let you guys answer that.
So you ask if some people are on the call that work with us?
They're asking if there's any firms that work with all three of you already
Yeah,
at the same time.
for sure. That's how we started to work together, and more, and we see the synergy when the three of us are there, because it's the full how do you call it, the three legs of, you said that the other day.
The three-legged stool of cyber.
Yeah, that's it.
I would love it if all of our clients were working with teams as good as Vincent and Brian are. But we do have a number of clients that are working with all three of us. The key thing for us is we're gonna expect, and we're gonna ask some questions and we will refer to industry partners like Vincent and Brian to make sure that they have the resources to do it if they're not already.
That's part of what we're doing. I mean, it's great to have the experts around. Nobody's going to know everything about everything in terms of finance or regulation. So being able to draw on the experts when any clients have questions, where do we start? How do we bring them in? How do we help get guidance on how to get the firms as prepared or with the infrastructure to meet these regulations? So that ties into the next question that came in. It said, how many firms that you work with are cyber compliant? So I would assume 100% that they work with, but I think the question more is around, in general, and I kind of posed this before.
Yeah.
Out of all of the potential, let's just think about independent RIAs for a second, because there's a lot of them. How many would actually be up to the letter of the law, fully compliant? And I've heard numbers pretty high, so I'll let the experts maybe share some speculation.
Yeah, a few years ago, there was a survey that was published by wealthmanagement.com, and they said that about 15% were compliant. Okay. That was before COVID. So with COVID, everybody got home and everybody say, hey, we have to do more. So I guess, and I hope, and we see it in our companies, that it's increasing, but I would say it's not more than 20-25%.
The standard is effort. So the standard, they're not looking for perfection. I mean, at the end of the day, when the regulators come in, when the authorities come in, they're looking for that effort. If you have no effort whatsoever or no documented effort, that's where you really get in trouble. But yet, to date, I've never had a situation where the insurance company or somebody came in and they're only hard on the people that don't even try. So I would say that most firms are at least trying. We're seeing the bigger broker dealers, the big insurance companies, they're putting out some guidance, or at least some documents, and sometimes they're even building an information security policy that they expect you to adopt. And when you adopt that, you've taken that one step. So now you have your plan. We've gotten past that. And then you start to think in terms of, which part have I done that was mentioned today? And which part is being done for me? Because some of the financial institutions are doing some of these things. So if you're using the tech stack from a reputable firm, then ultimately there's a benefit of being part of that, quote, tech stack, or that integration, or those types of things, where you're leveraging those tools that have been put in place. So it's a hard question to answer, other than a significant number of firms are trying now. Several of them, in all of our firms, there's certainly a lot of financial institutions that have done a much better job. They started earlier. We're seeing, but our number would probably be, of even the people we see, I'm going to say the number is unfortunately low when it comes to complete, but very high when it comes to effort.
Absolutely. Let's get to a couple more questions. Here's a good one. Do firms you work with typically have a CISO on staff?
Half the firm, no. Half the firm, yes. So we serve a range from the solo advisor to big carriers, insurance carrier with thousands of advisors, and everything in between, broker dealer, mid-sized broker dealer. So I would say that half, yes, because they're bigger and they can afford it and they need it. And the other one, no. It's And we see the list on the call today. I know some of these people, they're everything. They're the advisor, they're the CEO, they manage their advisors and they play that role, or they share it with somebody in operation. So
in our process, all of our clients have to assign somebody as the security officer. They don't necessarily have to rise to the level of a chief information security officer. That's a big responsibility. I don't know if you saw what happened with the SolarWinds, but it's very scary when a role breaches the corporate veil. The person at SolarWinds was held personally liable for that breach, and that gets scary when you take on that role. Security officers, though, these are people that we're supporting. We basically, our structure is to assign somebody as our liaison and make sure that everybody in that firm knows to talk to that person, and that person will grow. So that's a regulatory requirement that you assign somebody. And our model is to support our firms through a point of contact that we call the security officer.
Great segue to another question we have here. It says, what level of expertise is needed to develop a firm's program, or could a client leverage your base programs? And I think that's something that, Buckler has done a lot of work on. So I'll turn that over to Vincent to start with that one.
I mean, to start from scratch and learn all this, it's major. To start with a template program that is pre-built and learn from that is by, what I mean by that is you read the policy, they're there, and you say, okay, I understand. You read the next one and you don't, somebody explain it to you. It's the easiest path to learn. It's to adapt a program that is built for your firm, specifically based on your regulations you have to meet, and that you have the proof that you meet regulation with this, and then you learn. So I think that the path is easier. That's why that was a trigger to build this that didn't exist. So I think it's easier, and that's what's happening to sometimes just 3 onboarding calls. You have people that said, I don't understand anything, and after 3 calls, they're like, okay, I get it. I have some technicality that I have to learn, but at least the concept of compliance, what it is to be compliant, can be learned quite faster than we thought even.
The key is really starting out with the firm size, understanding where that firm size is and where they can start. Like Brian mentioned before, how they can move along and get better and put that effort in. Brian was 100% on when he says, when the carriers see that the effort is being put into place and they're trying, that's the key. Now, the beauty of it with OpenVRM and a lot of the work that Vincent's been doing, it's actually built a path where you can be a small advisory firm, 2 or 3 people on staff, start with that simple stuff, put the effort in, develop as you go, all the way up to a very large dynamic firm where you need a lot of help from FCI. Okay, so you can get the whole spectrum. The key is to identify where you're at on that spectrum and how you start putting the efforts in place to get to a better position.
And Chad, what you've been doing with lowering premiums, and if you can just talk for a second about what premiums you're seeing out there, because I think when people understand that cyber insurance when you have these things in place, I just want to be clear, because when you're filling out the application and you say you don't have them in place, your premium's going to go pretty high.
Or no premium.
What premiums are you seeing out there? Like, what could a small firm expect? Are you seeing premiums from, I don't know, what range are you seeing?
It is all over the place, and that is going to be the most unsatisfying answer I can give you, is that it really, really depends. But I'm going to give you an example because you got to have something, right? So the best example is I just went through today on a firm, and they're so your average type firm, out there is an RIA only, plain vanilla, a couple of million in revenue, a half a dozen team members. We were looking at $250,000 in coverage. The price ranged from $500 to $2,900. Okay. And that was over, I think we had 6 or 7 different carriers, do the initial quote on it. Now, there was more underwriting that needed to get done, but you can see that's a huge range. So the next question is, well, what's the difference between the 3,000 versus 500? There's a difference there. And we want to make sure that we understand that before we make a recommendation to the client, that there's an alignment with their firm profile and what they need, because the answer might be the 500 option, or the answer might be the 3,000. It just really, really depends. And that's even before you get into limit, deductibles, all these levers that we can push and pull, types of coverage that we include or exclude from the cyber. So sorry, unsatisfying. It's going to depend, but that's what it looks like.
Time for maybe one or two more questions here. We got Mr. Wigglesworth has asked an interesting question, I think, but we can apply it more broadly too, about why does selling cyber insurance to insurance agents seem challenging, but follows it up with, I think he's looking for more, how does it work when you have firms that are part of a larger organization and you may have a blanket or a policy? Should then the individual producers, whether it's wealth managers or other types of services, should they be having additional policies above and beyond whatever maybe the group's blanket policy is?
Wow. Here again, it depends. So the big challenge with cyber insurance for cyber agents is all the different vectors that come into play. When I talk about vectors, how many different ways you can access this world that we're working in a cyber arena, right? That goes your vendors, your carriers, each one of your independent contractors. That is a lot of vectors, and each one of those have a lot of opportunities, and can you, as let's say if you're an MGA or something like that, you don't control all of the downstream agents that are there. And so sometimes the answer is, and we've done this before, where you have really good controls over the entire organization and you can get a blanket policy that covers everyone. That can be a fantastic way of doing it. And then you don't want the ones, the end user, or let's say the advisor on the front line, buying their own policy. Other times you don't have good controls in there, and we'll get folks coming, the end user advisor, that should buy it or not. So making that decision is important. I cannot give you a blanket statement answer, what's right or wrong, because it really depends on your specific firm, how it's structured, which controls you have in place. Do you have endpoint detection in there? And how consistent is that across the organization?
Well, that's perfect. And I'll borrow a line from Michael Smith here. I use Chad as my insurance guy, so I can always reach out to him. I think that's really the point of what we're doing here.
Oh, thank you, Michael. That's kind.
You need resources you can trust. And Vincent talked about the three-legged stool, right? The hang up about a three-legged stool is if one of those stool legs is weak or breaks, the stool's not going to work. And I think it's the same thing that we're looking at here. One of these components is not up to speed and you've neglected just one of them, the whole thing can come crashing down. So I think having access to this group of individuals that have a ton of expertise, they have excellent firms, they've created excellent products and solutions, they are used to working together, which is a big reason why we put all three here, so that not only when you're coming to one, they work collectively too when they have questions that are specific about each of these three components. So with that, any parting words from Vincent, Chad, or Brian?
Thank you all for participating. I'm surprised there was a lot of people, so I see the interest into those subjects. So thank you.
A lot of people that stayed. So
yeah.
Thank you for staying. That's a huge compliment in itself. It really means that, when you're bringing up some good points, I hope they, appreciate the opportunity to present today. This was great.
Yeah, honored to be here. I think we're always looking for better ways to work together to have, an industry solutions that work better without, a lot of our clients are independent advisors because they like that independence. That's fantastic. Having a good plan is and a backup plan, which means the team that's supporting you with each one of these vendors. Thank you for allowing me to join you. Yeah.
So maybe, Mike, to finish now, you know why we organize this. We need a fourth leg for the stool. So now I think you're going to start to work with us more and more.
Well, we're here to help, and anything that's going to make the lives of advisors and their firms more successful, we want to know about that, and we want to be able to connect them. And look, the big thing is it's time. Time's everybody's most valuable commodity. So how are we able to do this in a cost-effective yet very efficient manner? And I think with the technology that all three of you have, it's a great opportunity. So With that, we will follow up with those offers of free consulting and evaluations. We'll send you the checklist via email, and but reach out directly to anybody here on the panel, and we're here to help. So once again, thank you for the attendance. Thank you for staying on, and thanks for your interest in learning a little bit more about cyber.
Thank you, everybody. Talk soon.
Thank you. Have a great day.